David Bahnsen with me this morning. No impact on stocks that I can see from the shutdown, and I don't expect any impact either. What say you?
I certainly agree. We've been through this so many times. I don't think you're going to see any impact. Doesn't affect fundamentals, doesn't affect corporate earnings. Stocks don't trade off of Washington. They trade off of company profits.
Look on the bright side. If this is finished fairly quickly and the Democrats don't win very much, and Trump cuts big time in spending and jobs, the market goes up. It rallies, doesn't it?
No, not at all. And I understand what you're saying, but why would it rally off of something it didn't drop from before? Now, when you say cut spending, they were going to reshuffle spending.
Yep.
Some of the things that Russ wants to do with the so-called Doge 2.0, they can reallocate, but all that money is going to get spent. This isn't going to lower deficits.
Okay.
And so ultimately, those things aren't going to play in big picture. It's a political story. It's just not a market story.
Okay, you're with me for the hour, but I've got one more quick story. Do you care about the jobs report on Friday, whether it appears or doesn't appear?
Not especially. Now, if you go for a real long period of time, it becomes a bigger issue. It starts to even look a little politically tricky. We got the ADP report yesterday. I already know the jobs picture is not great. We don't need a report tomorrow, but we'll need more data as things come.
Got it. That's what. David, stay there, please. David Bahnsen is here for this hour, and he's brought his dividend picks, and he starts with Blue Owl.
I've talked about this one before, and I bring it up again. I've been in the city having meetings with asset managers this week, and Blue Owl is a real high-risk, high-reward stock. For us, we tend to favor things with less risk. You're getting paid over a 5% yield, and we believe it has huge price appreciation potential, that there's a lot of risk that they've taken that like a Blackstone or Apollo bigger managers have not taken, and we think that risk will pay off for them. Now, it may not, but we think a lot of that risk is why the stock's already down. They're flat since Liberation Day, where the others are up quite a bit.
Blackstone, that's your other dividend pick. They're up significantly since April of this year.
Yeah, they're about 40% from the bottom of where they were. They're up over 100% from where they were in 24. And, of course, you know, we're up. We bought it at $18 15 years ago. The issue here is Blackstone is the leader in all financial right now. I mean, they are the new Goldman Sachs of Wall Street in terms of their leadership in real estate. They're the largest real estate holder in the world, second largest in the United States, largest private real estate holder in the world. And, you know, real estate, we think, is going to be turning up with interest rates coming down, huge private credit business. I always love my meetings with Blackstone. We meet with them a lot, but I really this week learned a lot, and I'm pretty bullish. But as you know, Stuart, I have been for a while.
Yes, I know that. Yeah. Yes. You recommended it to me, didn't you?
Quite a while ago, but I still recommend it now. It's not often that I recommend a stock at 20, and I'm still recommending it at 170, but I do.
You see, it's got a way to run.
It's got a way to run. And then they grow that dividend every year, and that's the thing that you have to look to see what they think about the company. They keep growing the dividend because they're confident.
The White House reportedly wants to put ironclad conditions on federal funding for colleges. What are they doing, Lydia?
The Trump administration is pushing colleges to sign on to something called the Compact for Academic Excellence in Higher Education. It's a 10-point plan, and it would give universities preferential access to federal funds if they sign. Some of the requirements of the schools would be banning race and sex in hiring and admissions decisions. The agreement also urges schools to address campus politics. The administration wants departments that are hostile to conservatives abolished. They also want colleges to ensure that there's a marketplace of ideas. They want the free exchange of ideas to exist and a welcoming environment for conservative voices.
That's pretty strong stuff again for the conservatives, isn't it?
Well, look, free speech is free speech, and so it could be for or against. It needs to be written to defend free speech, but that includes conservative speech. The thing that I found fascinating is banning on discriminating on race and sex. Isn't that already against federal law? Like the fact that the colleges do it now is outrageous. That they have these admission standards and hiring standards around race and sex. It's against the law now. The Supreme Court said so.
I agree with you, but do you think we're going to come to the day when a majority of liberal arts colleges in America put forward a conservative point of view?
No, we're not going to get to a point organically where it happens, and I don't want it to happen because the state does it. I want it to win in the battle of ideas. That's what I want. So just allow it to exist, and then the truth will prevail. But that will take a long time. I hate to say it might even take longer than
a generation.
Yeah.
Beyond my lifespan.
I didn't say that. Yeah. I just said it might take a generation.
Okay, we've still got you. I have a question for you about your portfolio, about what you run.
Yes, sir.
What is your longest held stock?
Probably Procter & Gamble and McDonald's we've held the longest.
Because they gradually increase.
They've grown the dividend every year we've owned them. They've grown the dividend for 30 or 40 years before we've owned them. And, I say this all the time. McDonald's, since it went public in 1967, is up 70,000%. With the dividends reinvested. So the companies like Procter & Gamble and McDonald's are what educated me 25 years ago when I began professionally managing money about the beauty of dividend growth. You don't have these huge wild swings. You don't need a stock to go up 1,000% in a year, but boy, does it outperform everything else over time.
Sure does. David, thank you.
There is one trend for New York City that is defying all of this, and that's commercial leasing activity. It's picking up in the Big Apple. Big Apple posted its strongest leasing activity in years. Vacancy has fallen to 14.8%. That's the lowest we've seen here in 5 years. Midtown rents, they're climbing, surpassing $85 a square foot.
It seems like it's a mixed decision, isn't it? I mean, Mandami scares the rich, but a lot of people are still moving in.
That's right, and I would like to add the Bahnsen Group to the list of Midtown tenants doing long-term leases in the city. It's a mixed bag. It's different motivations, but one thing that doesn't change, the energy, the attraction of the city, media, culture, technology. A lot of people still want to be here. That Mandani is going to do a lot of damage, but Mandani is going to go, and New York's not.
He's going to go? Well, eventually.
Well, that's my point. Mayors come and go.
You think we could take 8 years of Mandami?
Well, you're not going to get 8 years of Mandami. You're going to get 4 years. And yes, I do. And by the way, New York has survived some really bad mayors over the years.
Oh, yes, especially in recent years. All right, David, congratulations on leasing space in Midtown Manhattan.
Well, we've had it for a long time, but we extended a very long-term lease. We're going to be here forever.
Really?
Yeah, I'm just telling you.
So you're going to be sitting next to me as long as I live.
You're going to be here forever.
Thank you, David.
Yes, sir.
And thank you very much for being with me.
Thank you.
Yeah, always a pleasure.